Welcome to Crowded Market Report by Jason Shapiro.
Hello, today is Saturday, February 3rd, 2024, and I'm Jason Shapiro with crowdedmarketreport.com. This week I wanted to just rant a little bit about the stock market here because what's going on is obviously pretty amazing and in some ways unprecedented and in some ways not. But look, the market has gone up a lot, okay? Certainly since those end of October lows. And it's very easy to say it's overbought and it's a sell. It's very easy to say, I missed this move, therefore I want to short it. And just for the record, I am not long the stock market. I can't be long the stock market based on what my process says. And in fact, I am set up arguably to try and short the stock market, but have not done that yet, fortunately, because if I did, I'd be taking it hard and that would suck. The market's on all-time highs, so clearly any short would be losing money at this point. Which brings an important point up, which is that I start from a prospect of I don't want to lose money because I feel like eventually somewhere in some market I will make money, and I don't want to just be making money back from losses. I want to be making new highs when I make money, and if I have to sit and I have to wait for the low-hanging fruit to present itself, then that's what I will do, because not losing money is just as important as making money over time when it comes to your return stream. I'll just give you an example. This is the positioning on the Dow, and you can see here, speculators were mega short, and this is where the market bottomed, actually right here. And we've now flipped to the speculators in Dow being the longest that they have been, in about 2 years, which is why I'm set up for a short. And same thing with NASDAQ, right? This is the longest the speculators have been in the NASDAQ in over 2 years. So I'm set up for a short. But just like anything else, you can do the same thing with sort of overbought, oversold indicators. It's like when a market turns, very often this stuff will show that the speculators are very long. And that's great. But there are also many times where this stuff will show that the speculators are long, but the market will not turn yet. And it's just like overbought, oversold. Very often when a market turns, it's when the market's overbought. But there are many times when the market's overbought that the market doesn't turn just yet. It takes time. You have to be patient. And the patient part, what I use, is this news failure thing. I will not short this until the market confirms it. And my definition of confirm is when the market goes down on what should be seen as good news. And in this particular case now, I think the market is very much in the mode of Goldilocks economy. We're getting great growth, and we're not seeing a lot of growth in inflation. Inflation is slowing down, and growth is accelerating. It's Goldilocks. So should we have Goldilocks data released, the market rip again, and then fail on that? That and only that will get me to short the stock market. Let it run. The old phrase, the market can be irrational longer than you can stay solvent, is very relevant here. Let it run up. I don't have to be long. It's fine. But I don't have to be short until the market tells me when. I think that's extremely important here. No matter how you want to define market confirmation, it's extremely important. And look, we know that this Mag 7 or Mag 6 or Mag 5 or whatever you want to call it is unbelievable what's gone on here. And there's so many ways to measure the unbelievable, almost unfathomable numbers. But one way I like to look at it is, Rockefeller, who was the benchmark for what a rich American looked like, died, and they estimate his net worth at the time of his death to be, in today's dollars, $24 billion. Well, Mark Zuckerberg made $28 billion on Friday. I mean, it's unreal. Now, is it justified? I mean, listen, Rockefeller sold to Americans, and at the time, the population of America was about 75 million people. Zuckerberg sells to the globe, which is about 7.5 billion people. And not only that, Rockefeller's cost structure was very high because he was an industrialist. The cost structure for these internet companies is essentially zero compared to that. So the return on capital is just phenomenal. And the ability for anybody to compete with them is almost impossible. How are you going to start a new Instagram? Instagram counts on the fact that everybody is on it. and therefore everybody wants to be on it. How do you break into that? How do you create a new Instagram and take the people off of that? It's very difficult. So these are almost, arguably monopolies and extremely high margin businesses. The margins that these people are making are unheard of. And typically in business, if margins are too high, then other competition comes in to reduce those margins. But you don't get that in this. So these people are printing money like the world has never seen before, and there seemingly doesn't seem to be an end to it. Now, one of the possible ends to it is the government might just get sick of it. And we saw last week Zuckerberg got put up in front of Congress and was chastised and forced to apologize to people for the damage that had happened to their children because of their involvement with social media. But you know what? 2 days later, the guy made $28 billion. So who's, I hate to say it so rudely, but who's laughing? So I think you have to keep that in mind when it comes to trying to short these things. On the other side, we have a situation here in the real estate market where the commercial real estate has crashed. You have banks who have those loans to that real estate as an asset on their balance sheet. And people talk about how the bank balance sheets have never looked better. But if these commercial real estate companies get foreclosed on with this commercial real estate, those assets on the bank balance sheets then turn to liabilities on their bank balance sheets. And how are the banks going to look then? And I understand that people know this for the most part, and we've seen a few small bank sort of blow up things, and it's meant nothing so far to this point. And I'm not one of these people who like to say, oh well, I see it and the market's not seeing it, it's going to come. But it just reminds me of when the residential real estate market crashed in 2008. I knew a lot of people who knew that the residential real estate situation was a bubble that was going to burst, but they knew it in 2005, 2006, 2007. And by the time 2008 came around, they couldn't afford to be holding on to these ideas anymore because they would have been A, losing money that whole time, and B, they probably would have been out of a job as a money manager if they had kept doing that. The one guy we hear about from The Great Short, okay, he cashed in on it, but that's because his clients, for whatever reason, allowed him to lose money for those first few years before he ended up getting the big payoff. Most people don't have that ability. These hedge funds fire these guys if they draw down 5-6%. So by the time 2008 came around, all the people that knew this macro thing were gone, and it seems like that's kind of where we are now. I don't know exactly where in the cycle we are now, but the people who know this fundamental story about this commercial real estate, which are a lot, if they're shorting because of that, they're getting destroyed, quite frankly. And once they are squeezed out of that and can't do it again, well, then it probably happens. That's kind of where I think if you really want to talk about fundamentals that's where I think the fundamental issue is. That's what it needs to be kept an eye on, and that's what needs to be looked for market confirmation. Please don't just short for any of these reasons, and we can come up with a million more reasons as to why everything is a sell here. But don't do it. Just don't do it until you get some kind of market confirmation. And respect stops. If you're shorting and the markets are making new highs, you got to get out. If your belief is that you're so bearish and the market's going to crash, well, then missing the first 5% is not going to be that big a deal. So think about it in those terms. If you're going to keep losing, trying to pick the top, which I've done in my previous trading life before I sort of got to these disciplines, it's going to not allow you to make money on the short side. Because one, you're going to lose all your money, or B, you're just going to give up because you've lost money so many times that you're going to miss the thing. You have to wait for market confirmation. I have done this in the early part of my trading life where I thought the market was a huge sell, so I just kept selling it and I kept getting stopped out, or I kept losing money. And then I learned about positioning, about process, about discipline, about risk management. And that changed my life. And I think those are the things you have to think about all the time. But in particular now, if you're looking to be short stocks, which I'm not going to argue with. Like I say, my stuff is telling me to look to be short stocks. Look to be short stocks. Wait for confirmation to do it. The market can stay irrational longer than you can stay solvent. Please keep that in mind. Extremely important here. It's not about what you make tomorrow or what you make the next day. It's about what you make over time. And if you're not in the game, you can't make anything over time. So that's my thought for today. Always happy to hear questions and comments. And please check us out at crowdedmarketreport.com. I hope everybody has a profitable week. Thank you.
Subscribe to Crowded Market Report by Jason Shapiro.